welcome to Truckers Credit 101. I'm your host, Matt Manero. I'm with my friend Debbie Johnson. And today you are very lucky because we're talking about how can truckers improve their credit. In fact, we're going to give you on this webinar a roadmap to get your credit score to 700. 700 is the number. Everybody needs a 700 credit score. It changes things. And in this webinar, we're going to talk about it. But I want to do a little bit of an introduction. You need to know who your hosts are today. So let's talk about this for a second. Again, my name is Matt Manero. This is my friend Debbie Johnson. Debbie's more than my friend. We've been in business together in the credit improvement business for the last 7 years. I own a company out of Dallas called Commercial Fleet Financing, and we'll talk about commercial fleet here in just a minute. But Deb and I are experts at credit. Commercial Fleet looks at over 1,000 credit applications a month. Debbie, how many credit applications have you looked at in your career?
Oh gosh,
Tens of thousands, right?
Tens of thousands at least.
Tens
if not
of
more
thousands.
than that.
So for our audience today, I mean, I really can't stress it enough. You've got two complete experts at credit with you today, and this is a complimentary webinar to try to educate truckers and transportation-related professionals on the importance of good credit. Why do you need a 700 credit score? But I need to give you a little bit of my story because I'm not just some guy who owns a large finance company. I mean, I started from zero, right? Up on the screen behind me, you're looking at my story. I mean, my story of credit was as bad as it could get. When I started Commercial Fleet in 1995, I was in a one-bedroom apartment with a phone and a folding table. I mean, that's how it started. And if that wasn't bad enough, it got worse because one day I got up and looked out my window only to see the repo man driving off with my car.
It happens.
I mean, I think a message for everybody here on this too is that, listen, it doesn't matter where you start. It matters where you're going.
That's right. That is absolutely right. I completely agree with, where we end up at is where we want to be at that 700 credit score, because if you don't have a 700 credit score, you're going to either get declined or you're going to pay a whole lot more money in interest and insurance and all of the things that go along with the good credit.
Yeah.
So.
We're going to get into it, guys. This is an exciting, we have no idea how long this is going to go because we're going to go until we feel we delivered enough information to be beneficial for you. But, back on my story, I mean, again, I started the company 21 years ago, watched the repo man drive off with my car, and I had tremendous despair at that point. I mean, I no longer believed in myself, but I had one customer, a trucker out of Greenville, Texas, named Bobby Whitfield of Bobby Whitfield Trucking. And the picture you're seeing on the screen there is of Bobby's, what he called his Stagecoach Pete. It was his version of the Smokey and the Bandit trailer. You remember that movie, right?
Yes.
With the stagecoach on the back of it. Well, Bobby built a trailer and had it custom painted called the Stagecoach Pete. I mean, he was just that sort of a guy. And Bobby believed in me. So there were many times where I would call him and I would say, I'm done, Bobby. It's over. I can't do it anymore. I got to close up the doors. And Bobby would say to me, you are my finance guy. I'm going to buy a truck. You are going to finance it for me, and you are going to make it. And he believed in me when I didn't even believe in myself. And he did it so many times that I started to believe in myself again and turn this thing around. But again, it wasn't easy. I mean, here's the picture you're looking at. I mean, this is my second office, which when I moved out of the one-bedroom apartment, I moved into a two-bedroom apartment. And that was like a big expansion for us. How are we going to pay the rent of a two-bedroom instead of a one-bedroom? I mean, guys, my point of bringing this up to you is it started from zero. Anybody can have success in life. And I think, I think my story is a testament to that. It started from zero. Here's a picture of my wife. We've been now married 18 years. That's a picture of my wife. We were scrubbing floors in our first real office. I mean, filth pit, dump, rent was cheap. It was all we could afford, and the two of us in there, soap and suds and busting it out, trying to get to the next level in life. I mean, I get halfway emotional thinking about it because really what we've been able to do is an incredible story. So who is Commercial Fleet Financing today? We're the #1 independent finance company in the transportation industry. Outside of publicly traded companies, nobody's bigger than us. Nobody finances more transportation equipment. We've done over $1 billion in trucks and trailers since we started the company from zero. And we do over $100 million a year. We're celebrating our 21st year in business. We have processed over 100,000 credit applications since I started the company. And as I said, we've done over $100 million a year. Last year we did $104 million. We're on growth plans to double, triple, quadruple that. We have massive growth plans because we believe there's opportunity for our practices, our type of company, to help more people. And one of the biggest accolades we've had recently is for 2014 and 2015, we won the Inc. 500, Inc. 5000 Fastest Growing Companies in America award. And we were number 854 on that list, which is pretty amazing to do after all of our years in business. I mean,
That's incredible.
The people that make that list are like startup companies with venture capital firms pumping tens of millions of dollars into them, and they're growing by leaps and bounds. It's a hard thing to do after 20 years in business. And then the bottom line is we are experts in transportation. I mean, we know transportation, trucks, trailers, equipment, backwards and forwards. And then we also know a heck of a lot about credit because we look at so many credit applications on a day-to-day basis. So that's a little background about me. Deb and I got together in 7 years ago, and Deb handles the credit improvement side of our business because we unfortunately end up turning down a lot of customers who don't qualify because their credit isn't good. And we decided to help those people, and we brought Deb in 7 years ago to develop our credit improvement program. Just on another side note, just to give you a visual of the type of equipment that Commercial Fleet finances, it's on the screen right there. But again, it's very transportation related. If it's got wheels and a title on it, we know it and we love to finance it. So let's talk about what we're going to learn today. On this webinar, Deb and I are going to teach you a few things. Number one, we're going to teach you the importance of good credit. We're going to teach you how credit affects all aspects of your life. We're going to go into very specific examples of the cost of bad credit. We're going to give you a housing example, and we're going to give you a real truck example as well, so you can actually see how much more you're paying because your credit needs work. We're going to talk about what makes up a credit score. We're going to talk about how you can actually start the repair and improvement process. We're going to talk about why do you want good credit, and then we're going to show you examples of how you can get rich by fixing your credit.
Yes.
Right?
Yes.
It's so hard to pay the additional interest charges and get ahead in life because with the examples we're going to show, it's a massive difference.
Yeah, all of the late pays, all of the interest rates, you know, the high interest rates that you pay with bad credit it's incredible. It will take money out of your pocket every
month.
Every month.
So let's talk about what is the importance of good credit. I mean, why do you want good credit? The first aspect is you need to understand who's looking at your credit. And the reality is more people are looking at your credit than you really understand. So your employers are looking at your credit. If you want to be a truck driver, there's a very good chance that your credit's getting pulled. Doesn't mean you may not get hired by the trucking company, but they want to see what you're all about. The vendors that you choose or want to do business with are yanking a credit report on you and your business. Finance companies like us, first thing we do, pull your credit. What's it look like? Does this guy know how to pay his bills? Your insurance companies are pulling your credit. Your landlords, when you need to lease space, are pulling your credit. Listen, even your cell phone providers are pulling your credit today.
Absolutely. They pull your credit for everything today.
Yeah.
It used to not be like that, 10 years ago, but today everything is based on a good credit score.
And that number is 700. So I really want to drill this point through that our goal is for the audience to understand that we believe that a 700 credit score is really the goal. Because once you get over 700, things really begin to open up. Wouldn't you agree?
Yeah, absolutely.
It all changes.
700 is the magic number. 650 is good, but 700 is the magic number. You'll be able to finance anything that you want to finance at any point in time.
Yeah,
with
700 is the number. So let's talk about what really is the untold story of credit, because everybody can focus on the money piece of it, but there's really an emotional piece of bad credit too that I think a lot of people live in and they don't have to, right? And that really, obviously, borrowing becomes difficult if your credit is tough, and you're going to pay a lot more. But bad credit puts you in what we call what is referred to as the wrong category. I hate to break it to you folks, but people judge you for your bad credit. So we understand that bad things happen to good people, but when someone's not looking at you, the individual, and they're only looking at you, the credit report, they don't look at you like that.
Yeah.
They look at you as a cheater.
Yeah.
As a guy or a gal who's gonna hurt them.
Yeah.
And take advantage of them and borrow and not pay back. And I just don't believe that you need to live in that category of judgment.
That's right. I mean, people don't have to live in that category of judgment. People don't know where to turn to. That's the problem. They don't know how to fix it, and they think that if they just keep quiet about it, it'll go away, but it never goes away. It only gets worse.
Yeah.
So that's why we're here to educate you on how to have a better credit score.
I think two other things on the emotional baggage, though, is it limits your dreams. Because look, you really can have these wonderful dreams of expansion and going from 1 truck to 100 trucks or 10 trucks to 1,000 trucks, whatever those dreams might be, or growing into a much larger facility with multiple bays and storage and repair and all of this sort of thing that you can control. But if you can't get the landlord to say yes to you, you can't expand.
Right.
So bad credit limits your dreams, and then of course it limits your ability to take advantage of opportunities. Let's use this for example. Let's say that you have 1 truck and you're doing a wonderful job for this account, and they want you to expand. That account says, we like the work you do, and if you had 10 trucks, we would give you all the freight to fill those 10 trucks. But you can't get to 10 trucks because your credit stinks. So no finance company is going to approve you. Or if you did get approved, the rates, the payments, the cash flow, monthly cash flow demands are so great you can't afford it. So guess what? You have to say no to that business. And therefore you just limited your opportunities and your growth and your dreams. That's the emotional baggage of bad credit.
Absolutely. I completely agree with that. We dream about having it all. We dream about, having a bigger and better life, but we have to have a good credit score in order to get to that bigger and better thing in life. And that it's based on your credit score.
It matters.
It matters.
So listen, some of you might be listening to us right now and you might be saying to yourselves, look, I get it. I'm ready. I need credit help. I didn't know where to turn to. I found this video. I'm watching you guys. I'm ready to get started. And I want to give you Debbie's number right now, because Debbie is a true credit professional. Together, we have helped thousands of truckers get their credit improved over the last 7 years.
Yes. I take people from a 400 or 500 credit score to 650, 700 every day. Every day, somebody is calling me, thanking me for the help that I've given them to have that better life and their dream, to be able to be debt free. To be able to get rid of all of this negative baggage that hangs over their head. I'm just really passionate about what I do and helping people be able to get to that next level in life.
And so if you want to start right now, we want you to watch the rest of the webinar and educate yourself, but if you're ready to get started right now, I need you to call Deb at 214-632-0632. Call her today and Deb will take good care of you. You can get started today. The point is, don't wait. It doesn't get better. Deb mentioned it earlier in the webinar. It doesn't get better.
Procrastination will cost you a lot of money.
Let's talk about the money. Let's get into it. Let's look at our first example of the cost of bad credit. And what we're using here is a $200,000 home loan or mortgage. Okay? If you've got good credit in today's marketplace, June of 2016, you can get a 30-year mortgage at a rate of around 3.25%. On a $200,000 loan, that's $870 a month. Now, this is just pure mortgage debt. It doesn't include your insurance or your property taxes. It's just pure the mortgage loan. So you'd be paying $870. The total of all those payments, if you paid it off in 30 years, would be $313,348. So you borrow $200,000. You pay it out at $870 a month for 30 years, and the total of those payments is $313,000. I'm going to take you all the way to the other side of things now, to the bad credit loan. A 30-year loan for damaged credit, if you can get approved, you're going to pay about a 7% interest rate on that. So that same scenario, just the cost of the bad credit, you're now going to pay $1,330 a month versus $870 a month. So that same loan is going to cost you $479,917. So if you look at the good credit loan, your total of all your payments is $313. If you look at the bad credit loan, the total of all your payments is $479,000. That's $166,569.
You could have it in the bank.
So you could have it in the bank, but Deb, I took it a step further to show everybody. I said, what if you took that difference and actually began to invest it, let's just say in a mutual fund, and that mutual fund paid out 6% in an annual rate. That's a reasonable rate of return for a mutual fund. And if you invested that same difference between good credit and bad credit over 30 years, you would have $479,289 in that mutual fund.
Wow.
On top of the $166,569 that you saved in the additional payments and interest charges, that's $645,858 swing over
Wow.
that same 30-year period of time.
That's the cost of bad credit.
That's the cost of bad credit.
Yes.
It's unbelievable. You have to understand that, folks, because so many times, Deb, how many times does a customer say to us, I don't want to get my credit fixed because I can handle the $1,330 a month payment?
They say it all the time, and it makes no sense to me. I try to tell them, look, would you not rather pay $800 versus $1,300? I mean,
So we want you to understand, we're talking about it here, and we're sort of looking at these numbers and saying how ridiculous it is, but don't limit yourself by saying, well, I can afford the payment. See, that's what so many people with bad credit do. They say, well, I can afford the payment, so we should buy it.
Yes.
You shouldn't. You should take some time, take some money, take some energy to skill up on how to do it. We're going to show you strategies here, but Deb can do that for you. For the cost of Deb's services to fix your credit, to save $648,000 over that same period of time, I mean, it's just a no-brainer.
It is a no-brainer.
Let's look at a real-life example for our transportation audience so they have a better understanding of really what happens. And what we've done here is we've taken a $75,000 truck purchase. Again, the good credit loan right now on a $75,000 truck purchase, you're looking at about a 5% rate, and most truckers are going to do 4 or 5 years. We've run it on a 5-year term. That translates to a $1,475 a month payment. Boy, I'm telling you, I know enough about the trucking industry. That's the sweet spot.
Right.
If you can get a $75,000 truck that's a reliable, well-maintained, low-mileage truck, and you can get it for $1,475 a month, you can make money with that truck. The total of all those payments is going to be $84,920. Now again, let's go to the other side, the bad credit loan. And you guys might be blown away with this number that I'm going to give you, but I'm telling you, these are real numbers that I see in the marketplace. Commercial fleet financing doesn't do bad credit loans. So we would never offer this type of a rate. Our rates are always on the lower side of things. But there are lots of companies out there that are financing truckers at 25, 35, 45% interest rates.
Yes.
And I took the low end of the bad credit spectrum, and I'm using 25% rate. For 5 years, that monthly payment is $2,201 versus $1,475. The total of all the payments on the bad credit loan is $132,081. So the cost of bad credit between a good credit loan and a bad credit loan on a $75,000 truck is $47,161 over 5 years. That's $726 a month you're paying because you're bad credit.
That's a house payment, $727 a
payment.
month. That's crazy.
It's a house payment. Now, if we want to do that same scenario that I did if you invested that money in a mutual fund at a 6% return, and instead of in the house example doing it over a 30-year period of time, we're doing it over a 5-year period of time. We want these numbers to be real and accurate and understandable and make sense and be legitimate. that mutual fund would produce $63,715 for you over 5 years, plus the savings on the truck payments is $47,000. You would save $110,876 over 5 years.
Incredible.
Come on, this is real stuff, folks.
That is so awesome to be able to help people be able to put that $110,000 in the bank, in their pocket, instead of, paying that 25% interest. That is just incredible.
Yeah. Or maybe that's where the fuel for the expansion comes from.
Absolutely.
That's a lot of down payment on 5 trucks.
Yeah.
So boom, you just went from 1 truck to 5, just because you've got your credit cleaned up.
Yeah.
That's how you get closer to your dreams, folks. But Deb, let's get into it. Let's do an educational section of this webinar now so we get a better idea. Let's talk about the credit factors so people begin to understand what really makes up their credit score. What is this secret sauce, this algorithm that the credit reporting agencies use? And basically, this is how it breaks down. Take it away from here, Deb.
Well, the payment history is probably the most important thing. The 35%, the payment history is 35% of all of the factoring of the 100%. So really, you want to make sure that you pay your payments on time. You want to make sure that you don't go over the line of credit limit. When you go over the line of credit limit, then that is going to lower your scores. If you keep your line of credit down, let's say you have a $300 line of credit on a credit card. If you'll keep it to $25 or $50, that's going to raise your credit score. So payment history is huge on the credit factoring. The amount owed, 30% is factored into the amount owed. Length of credit history is 15%.
In other words, how long have you had a credit reporting is an important factor. It's 15% of how your score is created.
That's correct. And the length of that credit card, the length of that installment note, the length of your house note. If you've made good payments for those lengths of time, that's 15% of that credit factoring. New credit is 10%. So I always suggest that people get a small line of credit on a credit card, and that new credit will help them increase their credit scores by 10%. Right here it is. The types of credit, installment, the revolving debt,
charge-offs, bankruptcies, collections, what's on your report is important too. So when you start to figure out what factors up your credit report, you can begin to see this is the secret sauce. This is the inside look of how the credit reporting agencies are creating your score. And obviously, if you just look at the two things, how do you pay your bills and how much debt do you have, that's 65% of your score.
That is correct. Your debt to income ratio is just so very important to your credit score. So just keep those payments on time, and pay them off as quickly as possible, and you'll be good.
So now we have problems though. People didn't manage their credit very well, Deb, and they got into trouble. We get it. We understand how it happens. Look, we understand that there are crooks out there too who don't care about their credit. Okay, we're not talking to you because they're not watching this. We're talking to people who are interested in getting better credit. Maybe they went through a divorce.
Sure.
Maybe they had some medical issues.
Health issues always is a concern.
Health issues, major factor of medical bills that you didn't know that your insurance didn't cover, or you have no insurance, so the bill was higher than you can pay, all of that sort of stuff. But of course, the child broke their arm, or your husband or wife got sick, you have to get them treated, which you did, which is great. But now there's a bill that's attached to it, and you can't pay the bill. Boom, there goes the credit score, right? Yep. So we're now in step one of fixing your credit. What do we suggest you do? The first thing Deb and I suggest you do is you got to understand your situation. You really have to know, where do you stand? Because how many times, Deb, do we see a customer who says, well, I've got a 750 credit score, and we pull it and it's a 600 credit score?
All the time. I mean, people think that they have a really good credit score, and they really don't. I mean, they have things on their credit report from 15 years ago because, a third-party collection agency has pulled it off of the original creditor, put it on your credit report, then that hasn't been paid, so that third-party collection agency will sell it off to another one, and it's just a vicious cycle that goes on your credit report over and over and over, and it never ends. Every one of those creditors will leave it on there for 7 years if you allow them to do that, but it doesn't have to be that way.
But Deb, there's one other thing too, where some people are limited by what they think their bad credit is, and they actually have better credit than they thought they had. And so they're not even trying to grow their business because they think they're saddlebagged with bad credit because they don't understand their situation.
That's right. They don't understand a credit report. They don't understand how to read a credit report. They don't understand, what it takes to have a good credit score. So,
Yeah.
It's all a matter of education, and that's what we try to do here, is educate you, and that way you're going to go further. After I finish with you, you'll be further along, to be able to know what to do and what not to do.
So then we also have to, step number 2, or bullet point number 2 here is you need to understand what's accurate and what's inaccurate. There's a lot of inaccurate information on people's credit reports, lots and lots and lots. And that's one of the key strategies that we're going to talk about today is the ability to get that stuff removed.
I mean, let's face it, you have a person at the credit bureaus that are paid minimum wage to sit there and enter information from the creditors that have sent in that information. So we're talking about, there is a factor of human error there. Something that you may think is positive really is negative on your credit report because you don't know.
And so third bullet point is you need to know how much debt you actually have and how that debt corresponds to your credit score. Deb, you mentioned this earlier, but let's try to break it down one step further. Let's say that you have a $1,000 limit on your credit card and you have $900 outstanding against that $1,000. That is very detrimental to your credit score.
Very detrimental. You only have 10% open line of credit. So in order for your scores to go up, you must have 90% open on that line of credit. So, 100, I always tell people 10% of that line of credit is where you really want to sit at. If you need to get another $1,000, for another line of credit, then do that. But always keep those credit cards at least, I say 10%, but, we need working capital. We need, money sometimes. So sometimes you need to put, $500 or $600 on there. But if you do that, one time, if you're putting $800 on that credit card on a monthly basis, it will report $800 all month that month. Regardless if you go home and you pay it off the next day, it's still going to report $800 that whole month. So you've jacked up your credit score, at that point. So, you just have to be very aware of how to use credit cards. They're very good for you if you use them correctly.
And so bullet point 4 is what can quickly be improved. I want to address what you were just talking about there so people really understand it. What Deb said was you also need to understand when you're paying that balance down because the credit reporting agencies only report once a month. So if you paid it off after they reported, you have to wait another 30 days before that paid off amount now updates on your credit report to therefore improve your credit score. So Deb, you brought up a couple things. We're going to address it a little bit further here in the next slide, but the importance of carrying a credit card balance that is closer to the 10% of the available amount. In other words, on $1,000, you shouldn't have more than $100 outstanding so that you get the benefit of the lower debt to income piece of the credit scoring model. Right. Now, and Deb, you also mentioned, again, we're going to talk about it here in a sec, but you mentioned that, and look guys, we understand you may need your credit card to buy fuel on your truck, so how can you keep $100? The answer is you need to go get a bigger limit.
That's right.
So you need to work to get that credit limit moved from 1,000 to 10,000. So correct. You could then be putting 1,000 worth of fuel on your credit card, and it's not impacting your credit score.
That's correct. It's keeping all the time. It's giving you a good credit score at that.
Yeah.
And when you get that $10,000 line of credit, and it will happen. these credit card companies will send you
They're happy to
offers
increase
all the
it.
time.
You get 3 months of
Yes.
good pay history and you can bump that limit.
Absolutely, every time.
So how does somebody go ahead to get a copy of their credit report so they can begin to understand their situation? And Deb recommends annualcreditreport.com. You can get a free copy of your credit report right there. We went ahead and also gave you the names of the 3 credit reporting agencies. TransUnion, Equifax, and Experian are the 3 primary credit reporting agencies that house your data. They keep your history. And you get a copy at annualcreditreport.com. There's a couple other ones too.
So I want to kind of touch on that, because people think that if they go to, Free Credit Report or Credit Karma or any of those companies that are a third party to the credit bureaus, that they can get current information. It's not current information. It's old information that those companies, all of those companies, buy old information and they sell it to you. So you have to be very careful of who you listen to about your credit report. So Annual Credit Report is a good source, and Annual Credit Report is a source that you can trust that will give you a current credit outlook of your credit report.
All right, let's move on to step 2, which really begins to create the steps to fix your credit report. And once you've understood what's on there by getting a copy of a report, understanding how to read it. By the way, when you get a copy of your report, they'll give you a key so you can figure out how to look at it and read it. And you can certainly do the Google searches as well to figure out what each piece of information means. But then you have to write letters, and you have to dispute the negative information on your credit report. It is your right. The Fair Credit Reporting Act states that the credit reporting agency must remove negative, inaccurate information from your credit report within 30 days. If they cannot verify it as accurate, it must be removed. But guess what, folks? No one's helping you. No one's monitoring that for you. It's up to you to find out what's negative on it and inaccurate, and write the letters to the 3 reporting agencies and force them to remove that inaccurate information.
Absolutely. There are several laws and regulations through the Fair Credit Reporting Act that they must follow. One of those laws is that they have to send you a complete payment history. They also have to send you the original contract that you signed that says that you owe that debt, that you are responsible for that debt. If they don't send that information to you within 30 days, then you legally can have it removed from your credit report through the process that we do. And I want to touch a little bit about credit repair versus debt validation. Debt validation is really what we do. Debt validation is a lot more in depth than credit repair. Credit repair is just a letter sent to Experian, Equifax, and TransUnion, and all they do is the creditor has to validate that negative remark, and if they do not validate that within 30 days, then it'll come back on your credit report. So with the credit repair process, it's a temporary fix. So we say that the debt validation process is a whole lot better for the consumer, because when I get something removed from the credit report, it is permanently removed. The debt is removed, the trade line is removed, everything is removed from that credit report. They can never put it back on your credit report because I catch them violating your consumer rights. So that's the important piece that people miss when they think that they can do it by themselves. And yes, they can dispute something on the credit report through Experian, Equifax, and TransUnion on the website, but if you don't go those 5 extra steps further and get it permanently deleted, then it's going to come back on your credit report. So that's why our program is so important to understand and know what you're doing in order to get the job done correctly.
So it's really important, though, to understand that if you want to do a self-help credit improvement package, it starts with, number 1, understanding your current situation. Number 2, disputing the inaccurate information by writing letters. But if you really want to lock and load, this debt validation process that Deb is talking about is really the right way to do it. And it's very hard to do in a self-service application. You need to bring in a pro like yourself.
It is. There's so many laws and regulations that apply to each one of the trade lines that, it's hard for people to understand what they need to do. Credit is not taught in school. It's not taught in high school. It's not taught in college. The way that I learned is I was $57,000 in credit card debt. So I started researching back 15, 20 years ago. I started researching and I figured out the proper way to do it. I figured out what works. And when people started asking me, how I did it, that's when it became a business for me. And I've had a passion to, do it ever since. $57,000 is a lot of money in credit card debt.
It is. It's a lot of fun. Well, look, step number 2, or bullet point number 2 on step number 2 is, if you are going to dispute these items yourself, make sure that you send them as certified mail.
Absolutely. So
that you can then that certified mail receipt becomes almost like a timestamp for you on that 30-day window that is the requirement of the Fair Credit Reporting Act.
Yes.
Let's talk about step number 3. The action steps. What are some things that people can do right now to start to improve your credit? The first thing, and Deb and I, of course, have already talked about it, is the ability to build new credit and new trade lines. Look, if you have one trade line on your credit report, and it's a credit card that you had in college or just, out of high school, and it was $500 and it charged off, you're toast.
Toast. That is the worst. That's the worst thing that can happen, is something be charged off your credit report.
Especially if it's the only trade line you got.
Yeah.
So you need to think about building new trade lines. Okay, we're going to talk about how you do that through a secured credit card in just a sec. The easy fix that you can do right now in an action step is call your existing credit card companies and say, I want you to increase my limit. Again, we use the example, if you have a $1,000 credit card right now and you have $900 borrowed against it, if you bumped that up to a $10,000 limit, you would have $900 against it, which is below the 10%. Immediately, your credit score would probably go up 40, 50, 60 points right away just from that strategy.
Yes.
Okay?
Yes.
Let's talk about a secured credit card, because not everybody with damaged credit can actually get a legitimate straight up credit card. So you have the option of getting a secured credit card. So let's educate the audience on what that is.
So a secured credit card is when you take your money into the bank, and it's usually your local bank that you go to. You'll take $300 or $500 into the bank. They will issue you a credit card, so you will actually work off of your own money. When your scores get high enough, then you can get your $500 back and close that secured credit card.
Or maybe they'll leave your $500, but they'll bump your limit to $1,000 or $1,500.
They sure will, and then you can get your $500 back, and then you'll have a $1,000 line of credit. Mm-hmm. So that secured credit card becomes very important for you to build on as you're building your credit scores. So
it's a great way to get a new trade line and build new positive credit history. Look, bullet point number 4 on our step number 3 is, you have to commit to paying your bills on time. I mean, I'm sorry to tell you, but if you were someone who chose to not pay your creditors on time and you're serious about getting good credit, you have to change the way you think about making your payments.
Absolutely.
Got to make your payments on time. I mean, one of the easiest strategies there is just set it up on ACH. Absolutely. Have it automatically pay.
Automatic pay is sweet.
And then I think here's something that really begins to people get out of whack. And we are telling you, go get a secured credit card, but don't apply for more credit. Don't go down to Conn's and apply for a new appliance, or Sears for a new refrigerator. Stop doing that until we get this process moving in the right direction again. Stop trying to take out more consumer or non-beneficial debt for you. Stop having people pull your credit.
That's huge, Matt. I mean, people will go to a dealership, a car dealership, and they'll pull their credit 10 times before they've even You know, and every time somebody pulls your credit score, it costs you 5 to 7 points every time somebody pulls your credit report. So you go to a car dealership, they pull your credit report 10 times to shop your loan over 10 times. That's 50 points off of your credit score. And you go back to them to buy that, and then now your score is a 600 instead of a 650, and now you don't apply. I mean, you know, you can't apply because you have a lower credit score.
So, Deb, let's start to sum this webinar up here so people can really get a good understanding and finish here. Because I personally believe that the two primary takeaways for someone who's watching this needs to be the cost of bad credit. If you don't remember the numbers, go back in this webinar and watch that section again to really emphasize and put an exclamation point behind the cost of bad credit. We just gave those two examples, but think about it in insurance and cell phones and credit and cable and all these other things. And then the second takeaway that I want everyone to understand is truly this emotional connection, because having good credit makes you feel better. You lose that anchor that you carried for a while and I carried for a while and our audience is carrying, that you just don't need to have. It's not, life is too short to think of yourself as a deadbeat because you got bad credit. And by the way, that's how I felt of myself when my credit was wrecked. I didn't feel strong. I didn't feel powerful. And now I'm on so much of the other side of it that, you know, like I'll strike a deal with it on a car or something like that, and I'll say to the guy, you don't need to pull my credit. We need to strike our deal first. Okay, trust me, when you pull it, it'll be just fine. We're going to strike our deal first, and then we'll worry about the financing. Okay, good credit saves you money, and good credit makes you money. If you take the difference between good credit and you put it in an investment tool, whether it's a real estate piece of property or a mutual fund, whatever, it makes you money. And as Deb has mentioned a number of times, this word passion, we are passionate about helping people getting good credit because it is worth the effort to get it and to keep it.
Absolutely, it's so worth being able to be educated about it and being able to know what to do and what not to do, and just it's so worth it. It's so worth it.
So let's sum it up here. Look, again, I'm Matt Manero. I'm president and founder of Commercial Fleet Financing out of Dallas, Texas. We finance big rigs, bulldozers, tow trucks, moving equipment, anything that has a title and wheels going up and down the roads. We love it. If you're in the market to buy any equipment, you can call us. Our phone line is 972-247-8447. And if you are not ready to make purchases because you really are committed to getting this credit situation fixed, to getting that monkey off your back, the anchor around your neck done, give Deb a call. Deb can be reached at 214-632-0632. Deb, thanks for doing this with us.
Oh, I really appreciate it, Matt.
You got it. It's our pleasure. Folks, those are the two numbers. I hope you learned a lot on this webinar. Share it with your friends. Follow us on social media channels all over. Like this. Tell your friends about it. Pump it. Tell everybody about it. And until the next time we talk, thanks.
Thank you.